this video, we'll look at the complete inventory activity for Gatsby Manufacturing Company for the month of October. Here I have all three of the inventories put together. We have first the direct materials inventory, also called raw materials inventory. We have the work in process inventory, also called the goods in process inventory, and then the finished goods inventory. Notice that all of these balances, the ending balance that was in the September balance sheet would have been the beginning balance for October. All three beginning balances would have been in the September balance sheet under current assets, beginning balance of these inventory accounts for October. During the month, they all have different things added to them, and then at the end of the month, and then they all have something subtracted from them. And at the end of the month, the ending inventory balances, these are the totals that all list. All three of these ending balances will go to the October balance sheet and be listed under current assets, and each of the different inventories will probably be listed: direct materials, work in process, and finished goods. The only time that we see any of these costs expensed is right here when they are sold. The cost of the goods sold out of the finished goods inventory will be reflected on the October income statement. It's very important to understand the relationships between all of these accounts within the accounts, what's added, what's subtracted, and between the accounts, how they flow together, so that then when you are tested and you're asked questions, or if you're out in the real world and industry and you're needing to solve backwards to get into some numbers, you'll remember how the numbers work together. So let's get started with this. Let's start with the direct materials. We have a beginning balance of $10,000. Purchases were added, but we don't know how much. But we do know that the ending direct materials that are available for use would be $105,675. So $10,000 plus some number equals $105,675. So you can use Excel, you can use your calculator. I'm going to use Excel since I've got it here. So I'm going to take the total available for use. I'm going to subtract the beginning balance. And when I do, I will see that purchases must have been $95,675 in order to end up with a total direct materials available for use of $105,675. Direct materials used, $87,000. So what's our ending inventory? Well, now I can take those direct materials, the total amount that is available to be used, and subtract what was used. And since this is a negative number, I'm going to have to put plus in there, otherwise it'll be added together. It's just a trick of Excel's. So I have an ending balance of $18,675. Now let's go to the work in process, the next inventory. This is where all that activity is going on, where the materials, labor, factory overhead are being combined to turn these materials into a finished good. We have beginning inventory balance, $65,000. Not sure how many direct materials were used, or direct labor, or the manufacturing costs incurred. Total manufacturing costs incurred are made up of those three items: direct materials, direct labor, and factory overhead. We have the total work in process to account for at $285,000. Don't know how much was finished, but we do know the end balance for the inventory. So let's just start at the top. Believe it or not, we can work from the top, even though we have several numbers missing here. So if we know we have $65,000 to start with, and we add in those three costs, total manufacturing costs incurred, and then the total is $285,000, I can take that $285,000 and subtract the beginning balance, and that will tell me that my total manufacturing costs incurred this period have to be $220,000. So take the total to account for, subtract the beginning balance, that means additional costs added in, $220,000. Now I actually have my direct materials used because this flows from over on the direct materials side. So $87,000, again, that's coming from the direct materials used. So now I know my total manufacturing costs incurred are $220,000. Of that, $87,000 is direct materials, $25,000 factory overhead, so I can solve in for my labor. I'll take the total, the combined total of the items will be $220,000. I'll subtract the amount that is allocated to direct materials. I will subtract the amount of factory overhead. So that tells me my direct labor must be $108,000. And of course you would do a sum and check your numbers and make sure that this works out. Now we have beginning inventory. These three items together, total manufacturing costs incurred, added together gives us $285,000. So this is our total work in process to account for. Some of that has been completely finished and is a finished product now. How much? Well, I know that the total is $285,000, and I know that $58,000 materials are still in the process, so I can subtract that, and that will tell me that this number must be $227,000 in order for the math to be correct. Gives us an ending inventory for the work in process or goods in process of $58,000. The items that are bolded are the numbers that we saw for. Let's put the direct materials used in red to show you that it did flow up to the direct materials used in the work in process inventory. Now let's go to finished goods. Beginning inventory, we have no idea. Cost of the goods that have been manufactured. This is actually going to come from the work in process inventory. $227,000. I know my total goods available for sale are $365,000. So my beginning balance has to be equal to the total minus that amount that I added in or transferred over. So $138,000 have been the beginning balance for finished goods. Now some goods have been sold. These are the cost of the goods that have been sold that will make their way to the income statement. So we need to know what's left. We have $365,000 total in goods, and we sold $275,000 in goods, so we have $90,000 in ending inventory balance. So all three of these across the bottom will show up on the October balance sheet. This $275,000 will show up on the income statement. This is the cost of the goods sold. It's the only materials that are being expensed at this time. All the rest of the materials, all the rest of these ending inventory balances are considered assets for the company.